those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.
Troops are landing. They're landing all around me as I speak. They've come in from the sea and they're fluttering down, and they're just about the best thing that we've seen for a good many hours. They're showering in. There's no other word for it.
D-Day, the longest day, represents the turning point of World War II. It marked the initial invasion of the Allied forces of Western Europe and the eventual defeat of Germany. The Allied forces suffered over 10,000 casualties in the invasion, along with 1,557 Americans missing in action. In honor of the 70th anniversary, this June 6th, SD Bullion is proud to announce the launch of D-Day, the first coin of the Heroes SD War Collection in limited mintage. Heroes, don't let them die in vain. Start your Heroes SD War Collection June 6th, only at sdbullion.com. This is the Doc and Eric Dubin with a special edition of the SD Weekly Metals and Markets. With us today is someone who has a long and illustrious career in the U.S. Congress. He was a two-time presidential candidate and really the leader in bringing awareness on the public to the Federal Reserve. We have Dr. Ron Paul with us. Thanks for joining us, Dr. Paul.
Nice to be with you.
I wanted to start out today, Dr. Paul. You've long warned about the loss of the purchasing power of the dollar and the potential for a full-blown currency crisis. The risk really seems to have drastically increased in the past few months as Putin has responded via financial weapons of warfare to the U.S.-sponsored Ukrainian coup. And while the U.S. congressmen have sanctioned a handful of wealthy Russians and pat themselves on the back for that, Putin has been busy signing $400 billion gas deals with China, the Eurasian Economic Union Agreement with plans to launch a gold-backed Altın currency, which is the Turkish word for gold, and as well as they've been dumping their treasury bonds. So, Dr. Paul, can you give us your perspective on what the implications of all this will be for the U.S. economy as well as the dollar?
I think that it's going to be very significant, not immediate because, the deal is a long-term deal, 30 years, and the ramifications aren't quite known. But even so, I was surprised that the markets didn't react even a little bit more. But this is a sign of what's coming, and I think a lot of people know that, but it's not coming this week or next where people will really dump dollars. But they've already started it to some degree. The Chinese buy less, and we pretend that we're, tapering, and the Fed isn't buying as many. At the same time, the Fed manipulates and makes sure that Belgium, of all countries, are able to buy up the slack. So there's a lot of shenanigans going on. There is a greater weakness there, but they seem to be able to patch it together, and Wall Street doesn't seem to be, either they're in total ignorance or they figure, well, today I'm going to make a buck when the time comes, we know something is going to happen. I think most of them know and realize that dollar can't be maintained. One reason why the dollar is able to be sustained as well as it has been is who wants to buy yen or who wants to buy euros, and they don't. But ultimately, they will buy the real money, and that's gold. And I think, if you look at long-term, gold's been, a very, very good currency, in spite of the fact that Bernanke says gold is not money. So gold is money. And ultimately, that is where people will go to, and also to hard assets. So, I think this deal with Russia and China is a big deal. Russia is not a third world country, and Putin is not going to be pushed around. When other countries threaten not to use the dollar, we got pretty tough with them, and countries like Libya and Iraq and Iran, we're pretty nasty with them. But that's not going to happen with Russia. There's alternatives for two reasons. Our economy is weak, our dollar is potentially in big trouble, and our military isn't quite what it is perceived to be. So I think that watching the dollar and watching interest rates are very, very important right now, and things could change on a dime.
Nowadays, global trade conducted outside of the dollar zone is over 25% of global trade. And it's interesting when you reference how Wall Street may be indifferent to what's going on, and policymakers seem to be indifferent as well to some extent too. But there have been people like, for example, World Bank former President Robert Zoellick, who have suggested that gold would serve as a reference point for the financial system. And other people talked about how the SDR system may be revamped and serve as a basket of currencies to replace a pure dollar reserve and trade status currency. Do you see something like that in a not-too-distant future evolving and taking place of the dollar? When you look
I think they're going to try. Volcker's been speaking out about a new Bretton Woods agreement and SDRs, and somebody else has a reserve currency. What we want to do is just get them out of the business of pretending they know what the reserve currency of the world is. Nobody, when the world was basically on a gold standard, you didn't have central banks, insisting that certain currencies be used, but all the currencies had some relationship to gold, so it didn't really matter that much. I think there'll be every attempt in the world to do it, and I think this is the reason why they work very hard to discredit gold. And though gold has been, very significantly higher in these last 14 years since the year 2000, it was $300. Right now, it's down, but I believe our government and our Federal Reserve and the central banks in the world collude to try to embarrass anybody who thinks gold is important. But ultimately, the markets are much more powerful than the central banks. It's just that it's so disruptive, and timing is impossible to predict. But I watched this intensely in the 1960s and looked at all the predictions of what would happen to the Bretton Woods and the dollar relationship to gold, which was sort of artificially fixed at $35 an ounce. But finally, there just were too many dollars, and no matter what the government said, the market's overwhelmed, and they had to give up on that. It's more sophisticated now. I think they're very much involved in the futures markets, and they orchestrate this, and they do the various things that will dampen enthusiasm, even though I think those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming, but if they can just get things delayed a bit, it's helpful. When I've asked Federal Reserve chairmen, in a committee about this, they never said, no, that's not going to happen if I express my concerns. They just said that they used the word orderly. As long as it's orderly, it seems to be okay. So if you have the destruction of the value of the currency at 2 or 3%, as their goal is, this is orderly. But the problem is when people lose confidence completely, there's nothing orderly about it. I mean, currencies, there's always a panic, and that's hard to manage. So I suspect there will be a day when people will panic in the financial markets, not only against the dollar, but the worldwide system. And we are just slipping and sliding a world that keeps getting poorer and poorer because of the nonsense that goes on. This whole idea that the euro now and the European Central Bank said, well, we're going to charge you money to put it in bank. There's negative interest rates, as if, well, that's what we have to do because we're in charge of the economy. We're the economic planners. And if low interest rates don't work, we'll make them negative. But they've been taught this nonsense, and I guess they think it's going to work, but I don't believe it's going to work, and I think it will end up to in a period of time where people will panic and actually dump dollars.
It seems like the ECB is resorting to negative interest rates as opposed to outright quantitative easing just because they can't get the political capital together to make that program for QE, even though the Fed seems to be pushing it.
Yeah, so, even Draghi said the other day that he wouldn't absolutely not try to push quantitative easing. So I guess this is his first step, and he says he's bound and determined to get some inflation into the system. Of course, there's plenty of inflation. I mean, the money supplies go up, and there are prices going up. It's just that government CPIs aren't going up the way they think it should be. But there's lots of distortion and a lot of inflation out there.
We'd be remiss if we didn't ask you this, because a lot of people in our audience will remember very fondly all of the questioning that you had done in the committees with Alan Greenspan and Ben Bernanke. And with 2020 hindsight, when you think back at those testimonies, do you think that there are questions that you wish you would have asked, or perhaps follow-up questions when the monetary captains of the universe were there and perhaps being evasive?
Yes, there always is, because, you have 5 minutes. A lot of people would criticize me and say, well, why don't you have a back and forth? Ask them a question, let them answer, and go back and forth. But if you do that, I found out if you ask them one question, then they use up your minutes, your time, or you have to interrupt them, say, no, I don't want to hear that. And so I chose always to use 3 minutes or so to try to get a message out, and try to indicate something. But yes, there's a lot of times when I thought, well, I should have done it this way, and I should have asked this, but I just did my best under the circumstances.
Yeah, I'll always remember that time holding up that silver circle round at Bernanke with the smug look on his face.
He's like a vampire recoiling.
Yeah, no, it was interesting. I had met about 4 of the chairmen over the years, and I've said in my little booklets and talks about it that actually the person that was most easy to talk to was Volcker. I mean, he seemed to make a little bit more sense than the rest, and the most difficult person, of course, was Bernanke. He seemed to resent what I was doing more than the rest of them.
Well, Dr. Paul, I wanted to shift gears a little bit here. Today is the 70th anniversary of the Normandy D-Day invasion, and the slogan for the Heroes SD War Collection series is "Don't let them die in vain." And we really wanted to bring home the fact that we have a responsibility as Americans today to really fight to keep the freedoms that our forefathers fought so hard to earn. And obviously that starts with educating the youth, which you're focusing on now with your homeschool curriculum. But I guess I wanted to ask you, Dr. Paul, besides educating and teaching our youth, what else can the average American sitting at home and listening to this interview do to really stop the encroachment of tyranny and ensure that the next generation enjoys the rights and freedoms that our country was founded upon?
Well, each individual has the responsibility of trying to understand events, which means self-education, if nothing else, to become informed. And if they don't have access to good teachers, then they have to find them, and which is easy today. I know in the 1950s and the 60s, there was no internet and there was no news about the freedom philosophy, and you had to go searching. Today it's available. So I think every individual has to be informed about what liberty really means, what true history is about, what monetary policy is about. And I think that information then is translated into action because, no matter what you do, you have a chance to influence other people. And everybody has a different approach to that. They might be more active than others. They might be into politics, and they might be just into education. They might support candidates. Who knows? But there's always an opportunity. The one thing is, though, if you can become knowledgeable, people will finally come to you and ask you questions. I always thought that the few times that happened in Washington, it was more valuable than trying to lecture and yell and scream at people and say, what kind of nonsense are you talking about? That eventually several would come and talk, and they changed their views on war issues, and certainly we changed a lot of views on the Federal Reserve and monetary policy. Just think of before '08, nobody even cared about the Federal Reserve, and now, we've gotten a lot of attention on the Federal Reserve. We've passed bills in the House, at least, to audit the Federal Reserve. So it depends on the individuals and the opportunity. But if you know what's going on and credible, and not, the tone is important. I think if people take a sharp tone and say, you listen to me, you're a bunch of idiots, and this is what the truth is, nobody likes that. So hopefully through persuasion, but persistence and determination and consistency, that credibility can be gained.
That's a really great segue for a question that I'd like to ask you. And I'm an organizer for Campaign for Liberty's chapter in Grants Pass, Oregon. And Art Robertson, the chairman of the Oregon Republican Party, came to speak to our chapter, and he cited a Freedom Works survey that concluded that the advancement of liberty is a core value among registered Republican Party members, like the rank and file. It shifted from some 14% in the early 1980s to 42% today. And your campaigns for presidency and your organization, like Campaign for Liberty, has played a part in that significant shift. And we'd love to know your insight as to where you think the liberty movement stands today and where you believe it's going to be going in the months and years ahead.
Well, I think there's been great progress. This is where I'm encouraged. Not young people, but everybody. But mostly those are outside of Washington. You know, we have improvements in Washington, and we have more close allies, but they're small in number, and they're very, very important to stand up for the right thing and take the votes that seems to be in sharp minority compared to everybody else. But no, I think we're making great progress, and that's where I'm very encouraged that people are becoming aware of it so much better than it was 40 or 50 years ago. Even though on the surface things look very bad, I think intellectually we're making great progress, and I think it's a worldwide phenomenon. I think that we live in very, very unique times historically, because although we've had tyranny forever, it seems like, throughout all history, I think there's really an opportunity now with the information we have that all tyrants fail. All these economic systems are terrible, and they fail, and people are becoming aware of this, and that government is really the problem. Economic planning doesn't work, and these wars are not beneficial to the people, and people just need to wake up and quit supporting the wars and attack the financial people who benefit from the Federal Reserve. And I think that is what's happening. So the numbers are there, and we have to not get discouraged, because you don't have to wait for the 51% to agree with everything that we do. We have to have that 7 or 8 or 9% of people in leadership positions, you know, leading the way, so that 51% will go along and say, well, it is in our best interest to have more liberty and not more government. We cannot depend on government because it's been such a failure, you know, throughout all of history. And I think that if we look at it in a positive way, we can see some good things happening.
Well, we've reached the end of our time with Dr. Paul, so we'll wrap things up here. But we want to, number one, thank you for all your years of service, Dr. Paul. We greatly appreciate it. We know all of our listeners do, and even the American public who don't know how much they've benefited from it. We send you a thank you from them as well.
Great to be with you today.
Thanks again for your time as well today, Dr. Paul. In part 2 of the show, SD Metals and Markets, so we want to discuss the market action and give an update for our readers and listeners. Relative strength in gold and silver this week, and we say that as the cartel again attempted to take down the metals, but was really unsuccessful throughout the week. Silver continues to hold even above the 1850 level. It really didn't even get down to test that level like we suspected it might. I think 1870 held as the bottom in silver. Early today on Friday, back above 19. I think it touched 1920 on the COMEX Open. It's been since kind of knocked back down just under 19 as we record here at about 10 a.m. New York time on Friday. And in gold, 1240 has held and really about the 1250 level. It's spent the second half of the week above the 1250 level. As I speak, it's a rate is being attempted to knock it down. It just is broke below 1250. But what's your thoughts, Eric? Is this just indicative of the underlying physical demand that gold and silver refusing to break down, really back to the lows placed on New Year's Eve or last July with 1180 in gold and 18 in silver?
Yeah, that's essentially my assessment of what's going on. And so I said as much as well on Friday's show, and we got a few catcalls in our comment section for last Friday's show when it came to us making the possible exception of, seeing some further downside reaction today or throughout this week, but that basically we're in an area where there are large buyers, mainly China, but other buyers as well in both gold and silver, that are waiting in the wings to pick up the discounted prices that the cartel is delivering to everybody who wants to go long. And that level of buying is huge, and it remains in place. We've seen stories about how China was curtailing some of its investment demand earlier when they reported the figures from March, but then as soon as the week-over-week changes were reported, even in the same week that initial news story came out, it was clear that China was once again buying gold, and we covered that last week. And earlier Thursday's trading, both gold and silver caught a bid, and we're seeing what's interesting today as we record earlier than we typically do. It's right now as I speak, it's about 10 a.m. Eastern Time on Friday, and it's well past the release of the jobs report, but even though gold and silver were moving higher in response to that report, we can see the cartel taking down both gold and silver within the last hour. The cartel's still here. They're still doing the managed retreat scenario that we've spoken about time and time again on our show this year. It's like a Mexican standoff. Prices have not been able to get lower, and they probably won't go lower because it takes physical at this point for the cartel to push prices much lower than they already are. And that game had largely played out in 2013 with the raiding of all of the vaults, the GLD, the COMEX inventory supply, and then all the other vaults. That's where we stand now, and later this year, and given the fact that the NASDAQ, for example, the NASDAQ 100 index is over 70% RSI at this point in time in terms of its relative strength, overbought indication, and the trade of the day is still pile into equities and know that the Federal Reserve and other central banks have your back. The reality is that the economy is rolling over despite all of the managed numbers, and we saw the revision downward of the first quarter. We have European Union finance officials and central bankers scared to death about deflation, such that yesterday they launched first ever negative interest rates for the Euro system. So despite how much huffing and puffing the financial media likes to attempt to paint a picture of things being hunky-dory, it's clear that the markets are extended in financial assets or stocks, and the bond market is kind of an aberration with its really low yields. Part of that certainly is people fearful of a deflationary turn-down. It's also, as Ron Paul was mentioning, and I'm really glad to see that he's speaking to this, the Fed acting clandestinely to prop up the bond market to a greater extent than the QE reduction by presumably using swaps to have Belgium purchase U.S. bonds. I mean, all of this facade is just an endless game of market manipulation, and there's a lot of indication that things are very extended and very dangerous, and I continue to think that it's late June, July, somewhere in that window that we're going to start seeing the stock market turn down and simultaneous to that gold and silver moving up.
And while he didn't give a timeline on it, Ron Paul concurring with you of the risks of a full-blown currency crisis at some point is, in his words, not only affecting the dollar, but the other fiat currencies as well.
Yeah, and no fiat currency in world history has lasted for many, many decades. The average lifespan is around 40 years, and the only reason why the U.S. dollar has had such a long lifespan as a fiat currency is that the U.S. has enjoyed oversized economic and military superiority and command over markets in the 20th century. And that is fading. The power is moving eastward, and concomitant to that, we see the dollar coming under pressure, and the end game is here. It's unclear as to how long it's going to take for things to evolve into some other kind of system. But the history of fiat currencies are basically a long graveyard of fiat currencies, and there will come a time when the U.S. finds its dollar going through some kind of transition.
All right, so we'll wrap the show there this week. So for the Doc and Eric Dubin and our special guest, former Republican presidential candidate Dr. Ron Paul, thanks for tuning in to the SD Weekly Metals and Markets. Ron Paul is a former congressman and presidential candidate. He regularly contributes his thoughts and ideas to the Ron Paul channel. Dr. Paul launched the channel in 2013. Learn more at ronpaulchannel.com. This has been a special SD Metals and Markets with Dr. Ron Paul. Tune in this weekend for an exclusive interview with Eric Sprott, as well as the second interview with Jim Willey, which features the most shocking claim the Golden Jackass has ever made in his illustrious market forecasting career.